I apologize. Good morning, everybody. Good morning, Jeff. How are you this morning?
Excellent. Never been better.
Good. Good. Oh, welcome, everybody. Welcome, welcome, welcome. Um, Let me see what's going on in the chat here. Let me just say hello to some people here. I saw some pictures from the Halloween from you and your kids. It was great, man. It was great.
Yeah, we get into it. My son likes horror movies, so we did The Shining. Um,
Really. One of my
yeah.
one of my favorite movies of all time. Let me go ahead and just close my computer here, turn on some charts, and we can look at some stuff here. Yeah, I love Halloween's during on the weekend where we can actually kind of hang out and rest a little bit, but not this time around. The market's not letting us sleep. So it looks like we backed off a lot. We've had some news this morning come out. Do you want to give your 5 cents, and then I'll jump into my picture? I have very strong opinions about the market actually, which is kind of more so than usual.
That's great. I'm curious to hear them because we always got to improve our process and learn from each other, right? And
Ab-
I miss things all the time, and I get things wrong, as does everyone. So
of course.
I like validation, and I like to be skeptical of my own case when I'm wrong. But we came in hot, but we're fading a little bit. And I was talking to Francisco about this. There was like this optimistic pop, this news out of China that they were going to stop locking down so draconianly, like the COVID policy was going to go away, but it was unsubstantiated rumors. It wasn't official CCCP information. They didn't say that. In fact, just yesterday, they had locked down Disneyland in
Yep.
Shanghai randomly, and you have to prove a positive test to get out of the Disneyland. So people are literally like trapped at Disneyland right now in Shanghai. But for some reason, Chinese stocks ripped overnight. Oil in the commodity complex started going like wild higher because shutdown China has been a net negative drag on commodity prices worldwide. So I was saying to Francisco, there's been a pattern of this. That's probably the worst charts in the world, the most bearish things ever anywhere have been Chinese stocks. And we've been getting a series over the past like 6 months. We talk about this all the time of these optimistic short squeeze flares that everything's going to change and all of a sudden just get better, and they're going to stop, like locking up people, and they're going to let companies make money, and invariably all those hopes and dreams get vamos, like dressed dashed. So that's been the case. I prefer the rallies in like the stocks that are making money in the United States, like to be more realistic reasons to rally, and bottomed out in some of those sectors. But we still have the Fed tomorrow. So there's a lot to digest. What are you looking at, Roger?
Well, I'll tell you what I'm looking at. Obviously, we still have a lot of earnings and we still have a lot of things coming our plate. But I'll tell you something that I'm starting to see for actually the first time that I'm seeing it as far back as I can remember is I'm actually starting to see, how the first part of the earnings so far have been mostly the tag, the FANG, the chip stocks, and
Right.
the broad market earnings have been good. But I'm actually starting to see the Dow Jones get really ahead of itself and
Yeah. Me
like
too.
I
Me
think
too.
like I've been last. I'm always early. I mean, it's very hard to pick like a swing high. I mean, but
I
I
know,
think
man. I'm early too. I'm always early too. That's
it
why I
is what
like
it
to
is.
stagger into trades. I like to leg in because of that.
That's very smart.
Yeah.
But what I wanted to say here was that I think that we're going to see exactly what we've been seeing here, and I think this is way too much too fast. But what's interesting is
Hmm.
I'm not. So I've been over the last few days I've been shorting Marriott, I've been shorting Six Flags, I've been shorting
Wow.
GE, I've been shorting a lot of these stocks. Not like 3 weeks ago, but like in the last week or so as they've been coming up here, because I think the Dow
Interesting.
Jones is going to be, because the earnings are now becoming a lot broader than the FANG. Last week they were very concentrated in market cap. So I think we're a little overdone to the upside right now. I'm just not seeing that.
I like where you're at. I like where you're at. And a lot of those stocks are at like multi-month highs. So
Yeah.
the risk reward for them to go much higher isn't so great.
Right.
I like that. I like that a
like, look
lot.
at Marriott. Like, it looks overbought right here. It just does. I mean, the RSI is overbought. I mean, I mean, we're not shorting it at 139. We're shorting it at 160. As you just said, multi-month high.
Yeah.
Another one. I don't know how you feel about cruise lines, but I went short the cruise lines too. Norwegian.
They've run a lot. I had Norwegian as a long in October for Money Flow Elite, but that's why Money Flow Elite stops every month because I wouldn't want to keep buying that stock here. It's probably got
Yeah.
a lot of downside. I wouldn't want to keep buying it for a longer term trade. Definitely not.
I mean, Jeff, this thing
So
almost
we
doubled in the
had it.
last
We
few
had it for
months.
that month.
That's
We
beautiful.
had it for the month for that for that. I saw people. I'll talk about the program later. You know the program. You like it a lot,
I love the
and
program.
that's what's so great about it. Thank you, Roger. That's what's so great about it is we don't stay married to these trades because of this fact. Like that move has happened. Like you can't just because the violence of the turnarounds can be severe. So would I rather be long or short Norwegian here? Probably short. Probably short. I
Yeah,
like being long in October. See, Robert K said he made 170% on that trade. Hell yeah, Robert, let's go.
love that.
But
It,
I'm curious to see what people are going to be buying and selling the beginning of November.
Yeah, and another one is Bud. I just wanted to kind of show you some stocks that I've been shorting. I haven't shorted in a while, and this rally's really making me nervous. But I'll tell you something else that I'm seeing that I think is kind of interesting, and this is really interesting.
Mm.
I think, and again, I could be totally off of this. I mean, but in my opinion,
Mhm.
if you look at the stocks at the sectors that have been really under fire lately, like discretionary, they didn't run up that much. So I think they're still
No.
kind of in that consolidation mode. I have the tech doesn't seem like it ran up a lot. Communication sectors are already near the bottom. So I think those stocks are going to see a lot of this. I think the tech sector is kind of in a holding pattern. You know, just last week I was talking about Shopify starting to base. I was talking. I mean, look at this. I mean, from 177 to 35. I just think that some of these stocks have had it. You know what I mean? Like Twilio, and
Oh yeah.
I think they've had it in terms of the downside. And you know, not all stocks bottom out at the same time. You know,
No,
it's
they
not an
don't.
exact. No, so I think stocks like Twilio and if I can remember the ticker symbol for some reason I can't recall it. It's a TW. Maybe Francisco remembers it. Twilio, was it Twilio? Twilio, right here, Twilio. This stock here, I just simply think that these stocks, and again, I'm not saying that it's the absolute bottom. We might not go a dollar, you know, but I think for the from the big picture kind of view, which is what we're talking about, I think we're at the point at a position in time where these stock, I mean, going from 458 to 72. Do you know how many companies in the world rely on this company for big companies rely on this company for tech? It's not going anywhere. It's like Micron in 2000 and 2008 kind of crash. They go down, but they'll come up. Versus some stocks that'll go down that will never come up. But I want to
So
take
in a
your
nutshell,
opinion.
and I like this. You're bullish. You're bullish on the oversold stuff, and you're bearish on the overbought stuff.
I am.
So growth versus value, basically, because value's
Yes.
been totally like crushing growth, and it's gotten so overdone. It's
Yes.
gotten so overdone. I'm with you. I love that. I love that trade actually.
Yeah. So
I do.
and anybody who's following kind of what I'm doing, they'll see that. But again, you know, we've got so many things going on right now. We've got earnings, we've got the bond market, and actually, I wanted to talk to you a little bit about the bond market. You know, obviously tomorrow's a huge day. Do you, I'll just preface this by the fact that the bond market is pricing in as of this morning. Correct me if I'm wrong, but as of this morning, it was like a 91% chance of the Fed going 0.75. What's
Yeah,
your
it's going to
take?
be 75. It's
Right?
going to be 75. But the thing is this, right? They last time everybody knew what they were going to do. Remember, it was like fully priced in that it was going to be 75. It was close to 100 the day off. They did
Yeah.
75. So at first we got a relief rally, but then Mr. Powell went on the television and said the word pain like 16 times in an hour, right? And
Did.
so he's trying to create a sell-off. He wants the market to stay suppressed and subdued. I don't like the fact that they're actively working against any kind of rallies that happen. We've rallied a lot in a lot of names. I think they're going to kind of subdue that. I saw Goldman Sachs came out. I think it was either the end of last week or the beginning of this week. And I know you follow their macro research very, very closely, as do I, because they're some of the best in the world at it. And they said that they anticipate the Fed funds in 2023 and the beginning of 2023 to be around 5%, and that it's going to stay there for a while. So that would indicate that we get 75 basis points plus another 100 basis points. I don't know in how many slices they're going to do that. But if you look at the 2-year yield, it's come down a lot. So like the bond market's gotten ahead of itself a little bit in thinking that, well, maybe we're going to be close to done or they're going to roll back some of that. I don't know. But I'm of the opinion that inflation is still hot. They haven't done nothing to stifle it. And it's not something that you can just like, this is the thing, Roger, that people don't get. Inflation took a little while to get going. I mean, we had like a year and a half of trillions and trillions of dollars of fake money being created fiscally and monetarily by both the federal government through programs that we needed because of a pandemic, in fairness, but they overdid it. And then also monetary policy staying too loose, too low for too long, plus them buying bonds, the Fed, right? So that created this monster that is just this momentum train that you can't just like, it's a big cruise liner that you can't just turn around. So just because you raise rates too hard and too fast doesn't mean you're going to get people in Miami to drop the price of rent on a 1-bedroom apartment from $2,500 to $1,700 or $1,600 a month, which is what it should be at. It ain't happening. So that's the sticky inflation. But they made one big error. Now they're making another big error, and they totally think that the stock market, bond market need to crash, and stay crashed as the only way to get this thing under control. When I think that they can only just hurt the economy more by being so set in their ways. Because there's like, well, you lost that one child. Now you want to throw the other child into the ocean too? Like, I guess is what I'm trying. What can you do? You got to just like live with what you've done and make the best of it. But they're creating a scenario where we're going to have both high and sticky inflation and a bad market because they're fighting the market. So it's kind of like Chinese stocks has come to America. People have been talking to me. I've been talking to people for like a year, at least, plus with you, maybe 2 years, about Chinese headwinds with their actual economy slowing down, but more importantly, with their government stifling any type of growth and putting a wet blanket over their company's earnings. And I think in the United States, you have a Fed that's actively working against investors right now too, which is just, I've never seen it in my lifetime. I'm still trying to wrap my mind around it.
Yeah, it's really discouraging, and I think they're being. I honestly, I don't want to say what they're doing because I don't understand what they're doing. They don't seem to understand basic economic cause and effect and time shifts and how long it takes for things to take effect. And what's really bothering me is they've got some really good people telling them, giving them really good information, and they're completely not listening to any of them. And that's very, very discouraging. Maybe they are listening to them and we just don't know about it, but it doesn't seem like they are because they're making the exact same mistake they made that got us into this, and they didn't learn their lesson.
But they're consistent in being terrible, right? Like they're consistent. They're consistently making the wrong decisions. They're like a bad trader that is constantly just like making the worst decisions possible.
Well, let's talk about something. Let's stay on the Fed, but let me move the rhetoric a little further ahead. So you and I are I'm about 100% confident that they're going to go 0.75. I think based on what you've said, you feel about the same way, or thereabouts. Hey, that's great. Somebody made 170% on Norwegian going long on your last month trade. I love that. Sorry, I didn't mean to
I had four trades over 100% at a 9.
I love that.
In October, which doesn't suck.
Look at my face. That's happiness right there. So just a few things, because this is a very important topic, and I think there's not a lot of debate right now. I think there's like an 8% debate out of 100 about tomorrow. But I think the really big question is December, and I think that's the $1 trillion question, if you will. Yeah. So as of right now, there,
Yes, sir.
what's priced into the bond market is 50%. It kind of fluctuates, but it's about 50% of a point 50 of a half a handle. What do you think? I'm Here's where I'm at. I'll tell you what I think. I don't think they're going to do 0.75 again. I think they're
No.
gonna. I think they're gonna either wait and not do anything, or go 0.50. But I think this is the last 0.75. What's your timeline and your perspective view on this?
So I think that a lot depends on what the market does. I'm going to hedge. I'm going to hem and haw. I'm not going to be decisive here. So if they do 75 and then they don't give such a hawkish guidance and they don't say pain 500 times and they indicate or insinuate that it might be 50 basis points. But then you get like the Dow going positive on the year. And then you get the NASDAQ doing a 10% ripper. And then you get the S&P going to like 4,500 or something like that. Then I think then they'll and you continue to get the CPI prints that are month over 0.5%. Then I think they're going to use that ammunition, that collateral, so to speak, in gains to do 75. And then that crushes what just happened. That unrolls everything that just happened. So it's almost like you're borrowing money in returns and then paying it right back, because the Fed still has their pound of flesh to take no matter what.
Yeah.
They have their pound in their minds. They might be right or wrong, but that's what they've told us they want to do. So, people have always been saying to us, and we've been hammered in it. It's been hammered in our heads since we've got into the markets. Don't fight the Fed when they're raising rates and they're making easy money. So how many times, Roger, have we seen bad economy, bad corporate earnings, but the Fed lowering rates and stock market continues to pump? Well, this is the opposite. They're constricting liquidity across the entire planet. They're creating bond crisis they're creating currency crises in all kinds of countries in emerging markets, like real bad. And they continue to do it anyways. And inflation doesn't budge because of what I said, because of the fact that it's sticky. You can't just turn that boat around. You can get lumber to crash, fine, but gas is staying bid for the most part. I mean, we had a little bit of a 20% pullback, but then the Saudis came jamming in, rushing in, and they took all that oil offline, and they act unilaterally, my friend. They don't have to have a Congress at the Kingdom of Saudi Arabia. They don't have to pass shit through a Fed finance oversight committee. 5 dudes sit around a table. The king says we need to make more money, and the 4 dudes shake their head at the king and say, "We'll get it done, sir." And he says, "Good." And that's how it works. And that's who we're dealing with. But we've got an administration that goes to these people and begs them, when we could do it here, begs them to produce more oil, and they do just the opposite. They go 180 in the other direction. So for me, the low-hanging fruit, the easiest trade, the most obvious trade, the one that takes the least amount of intelligence, is still the oil trade.
Yeah, yeah. Now, one sector that I'm starting to see strengthening, really strengthening, is the industrial sector. Base metals had really good numbers. Industrial has, over the last month, has become my second strongest sector. Now, typically industrial stocks don't rise when they don't do so bad in a inflationary pressure, but they don't do really well in a recession. Do you think the sentiment is getting further away from a recession, and we're just realizing that we've been in one deeper in, and we're more towards getting out of it? Or do you think that it's just wishful thinking?
I think we're just getting started. I think we're in a mild recession, very mild, and you see it in tech. You see it in certain pockets of the economy. You don't see it everywhere. I think we're going to have a bad recession. I think there are parts of the world that are in a really bad recession, like Europe. Continental Europe is just devastated. The reason that continental Europe is so bad is they're super dependent on China. And China, whether they're creating this out of thin air by their restrictive policies, or that they just grew so hot for so long that it was naturally the business cycle and the economic cycle that it would slow down. China's a massive drag on the world growth-wise. So every Sunday night, while people are watching Sunday Night Football or 60 Minutes or tucking their little kids into bed, I'm sitting there on my little Bloomberg, like the nerd that I am, waiting for Chinese data to come out, GDP data, manufacturing data, because that's what's moving prices, specifically commodity prices around the world, the Chinese demand, which has been
Yeah.
horrific, has been really bad. And if you look at the super cycle of commodities, not oil, but like mining commodities, metals, in the early 2000s, it was China. So you need China to get back on the upswing for all those places to go,
Yeah,
for all those kind of companies to really go.
yeah, I think without global, I think without the global buy-in, the industrials will not. I agree with you because also it's kind of weird because you would think typically, I'm very much into my sectors and typically not basic materials, but materials and 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 industrial, they're very next to each other. They're best friends for obvious
Yeah,
reasons.
yeah, that's right. Yeah, for
You know,
obvious reasons. Correct.
just like consumer discretionary technology and communication. I mean, they're all the same. It's the same
Right.
stocks. I mean, is
Yeah.
Apple
Yeah.
a tech
Yeah.
stock or is it a consumer discretionary stock? So
That's right.
yeah, and right now, basic materials are much lower than industrial stock. So that's why I asked because it seems a little
Yeah.
uncharacteristic.
Yeah. And I think a part of it is because so industrial stocks, right? Like one component of their earnings is cost of basic materials, right? Industrial stocks. But the actual basic material, that's all it is the price of that, right? And that's
Right,
strictly an economic output. It's just a supply and
right,
demand thing.
right,
So
right.
it is interesting though. It is totally
Yeah,
interesting. And
yeah,
I I'm still like I would have expected those stocks to do a lot worse, but you can't argue when Caterpillar comes out and has massive earnings, et cetera. Um, you know,
and also the defense companies. I think the large defense companies are also consuming a large because of the war. I think they're consuming because the number Northrop Grumman and the other
yeah,
companies. So I think that's also part of that is industrial too, and those have been doing very well for obvious reasons as well. So,
it
but I
also
think
feels like, oh, go ahead, Roger.
no,
I
no,
didn't
no,
mean to
no, no. Go
interrupt you.
ahead. No. Go ahead. Go ahead.
It feels like that sector has been a bit of a safe haven in the stock market, right? That's part of like that Dow Jones, I mean, bid that people have been looking at relatively sober price earnings ratios companies like oil companies are a great example. Like the stocks are up almost 50% a year, but they're all still trading at single digit PEs. Like I heard Leon Cooperman this morning. He was talking about he's a very intelligent guy, Lee Cooperman. He's, Omega Fund managed billions and billions
Very,
of dollars.
very, very smart man.
One of the
Yes.
OG partners at Goldman Sachs, super intelligent guy. And I take my cues from these people. I'm not like reinventing the wheel here. This guy said the same thing. He's like, Warren Buffett said the same thing. He's like, I made a bunch of money in oil this year and I wanted to take some profits off the table. And I'm paraphrasing him. But then I sat down with the CEO and we went through the numbers and the stock's still cheap. So I added to my position because I was looking to cut. But instead of cutting, I added. And I'm glad I did because it's gone up a lot more. And so that's happening in industrial stocks too, I think. I think.
Yeah. There's
Whereas
there's
people are looking at like Tesla and companies like that and saying, if we do have a hard landing, is 60 PE, 70 PE realistic? Probably not. Those will be
no
35 PE.
right.
So if that happens, and even if they make the same money, you're looking at a lot cheaper a stock.
Definitely. So let me ask you this. I kind of gave away my game plan in the beginning for I think that the blue chips are getting a little overbought. I think that we're entering a zone of safety for tech and consumer discretionary. At least I'm talking short term. What's your
Yeah.
play for the next few weeks? What's your big picture in terms of what you're seeing in terms of individual sectors or stocks or links? Just to give people a little taste of what Jevson and Aries thinking right now.
I'm thinking that the Fed might smash the market, but the market wants to go higher still in earnings. So my base scenario is the Fed does succeed to smash the market for a very short period of time, but that's a dip to be bought, unlike the last one where it went a lot further. So the last time the Fed smashed the market went down for like 3 straight weeks. I don't think that happens this time. I think they do succeed in smashing the market for a day or two, but invariably the bulls come back. The bulls come back. I'm nervous about the election. I don't know how that's going to go. I mean, you know how I lean, but that's another big thing that comes out next week. And I have a a way to play that, I have a presentation this afternoon at 1 o'clock about what I think is going to happen with the broader election. So that's a big caveat that's going to move a lot of things and move a lot of sectors. And then invariably, I think the sectors that benefit from how I think the election is going to go, I think those sectors are going to do really well. And you named one of them earlier, hint, hint, like 10 seconds ago, defense. And so I think some sectors and some stocks will continue to rip and like really rip. And I think oil too, but some will not. So I think broadly speaking, it'll be a mixed, choppy market that invariably goes lower by year end. But if you get caught in some of the sectors on the wrong end of that equation, it's going to be catastrophic. But that's going to be a way to make a lot of money vis-a-vis puts.
I agree with you. I think that's the problem. I think a lot of investors are looking for a lot of upside or a lot of downside, but no one's considering the most obvious choice, which is just a lot of volatility and a lot of going nowhere, and just a lot of grinding. Kind of what we've seen since May of this year. I think we're going to continue seeing that till we get some clarity, especially from this Fed. So I do agree with your analysis, which is actually really good for swing traders. And I'm sure that if they join you today at 1 p.m. for your special presentation, they're going to hear your best sectors, your best analysis. Tell us more what you're going to share. Tell us what you're going to talk about.
Well, I'm going to be talking about what I believe to be is the red wave that's coming next week, and how institutions are going to rebalance trillions of dollars on that announcement, how they're going to already sniff that out, and they already are today and in coming days, and how my money flow elite system takes advantage of those huge institutional flows that happen at the beginning of months on big catalysts like elections. And just to trail that money, I'm kind of like a spy watching these guys, detecting their entries and accumulations into these names and riding their coattails the entire month to lock in some nice gains. Like I said, we had 400% plus winners at a 9, including a short in October. You know, October in the Dow was the biggest October since 1976. I was born in 1976. That's a long ass time ago because I'm pretty old. And I had a short, which was Tesla, where the put was over 100%. Think about that. So not all stocks went up. A lot of stocks actually got smacked. I have longs. I have shorts, though I'm leaning mostly long. And I'm just riding those institutional waves. There's going to be a big red wave coming next week, and there's going to be huge money to be made. So if you want to learn more about it, join me at 1 o'clock today as I go through my presentation and show you the analysis that I've uncovered.
It's going to be a really, really good session, folks. You don't want to miss out. It's happening right before the Fed. I mean, the timing, I love to always schedule things where they're really relevant, and this is relevant. I'll make sure to finish my VIP room before then, and we'll shift everybody into your session. Folks, do not miss out. It's going to be a great, great session. Did you guys get some value out of today? If you did, please let us know. Subscribe to our YouTube channel. Let us know by posting comments, feedback, and if you have questions, post them below the video in the channel, and we will respond to you personally. I swear to you, we will.
I liked it live. I really liked this live session. That was cool.
Yeah.
I enjoyed that.
Very, very nice. We get questions. People ask questions. We get to see what's going on. It's much, much better live. This way, it's all in real time. And folks, we don't.
Red Wave will be recorded. Yeah. Go ahead, Roger.
No, I was just saying we don't. Jeff and I, we don't plan these sessions ahead of time. We don't talk about what we're going to talk about. So this is really kind of getting inside each other's mind and really figuring out.
It's so funny. It's like I do this thing with Lance, who's a totally different personality, and it has such a different trading style, which I love also. But I'm always blown away how I can have one conversation with him and the show ends up being really good and really, funny sometimes and different. But then I can have a conversation with you and it's like an entirely different part of my personality is brought out. But I thank you for it because I'm thinking a little bit more like longer term, maybe more fundamental, which is good because you need to have like that short-term action thing, but you got to have the big picture, baby. You got to have the big picture. I think that we got it dialed in today. So
yeah, and I think it also
answers, Roger.
Oh, my pleasure. And I think it also answers a lot of questions of why we're doing what we're doing, and why are you going short if the Dow's going? I mean, now you guys kind of understand why and what, and hopefully you guys see it from our perspective. It was a great
I
session.
think we always try to add context and nuance, unlike the talking heads on CNBC that just say, I like this stock or I don't. Like, you have to have context, because what could be an unbelievable short in the next 48 hours could be the best long of 2023. You have to have the
Absolutely.
context around that.
Absolutely. Thanks again, my
Thank you,
friend.
guys.
Folks, please join Jeff. The link is posted. Francisco will post it again in the chat. If you have any questions, reach out to me, support@marketgeeks.com, jeff@joyofthetrade.com. Love you all. We'll see you soon. I'll have my VIP room at 12, and then we'll roll everybody into Jeff's session, and we'll post links there as well. We'll see you guys soon. Jeff, thank you. And I'll see you same time
Great.
next week.
I'll see you guys at 1 o'clock. Let's go. Bye-bye.
Bye, guys. Bye, BB. Bye, Michael. Thanks, guys. Yeah, there's a problem with the website. We are working full time in getting it fixed. We are completely aware of it. Thanks, guys. Bye.
That's right. So what we're doing for now is sending the alert ideas within the body of the emails while we get that website up 100%. I'm going to be closing the room here pretty soon. So if you haven't yet, go ahead and click the link to register. If you already registered, go ahead and grab the other link, special.wellpress.com/Jeff, and bookmark that. That'll take you straight to the room if you jump in there before 1 p.m. today. All right, everyone. Talk to you soon.